Hello, it's Robert Miner with Dynamic Traders Group with today's DT Daily 3-minute update and trade strategies, where we take a look at an immediate trade opportunity, or one that's coming up very soon. And I think you're going to find this interesting today. So let's get at it. And as always, even if you don't trade the market that we talk about, what you learn and the strategies, the technical analysis, etc., in these updates, you can apply to any market at any time frame. Well, this is the S&P, and what's some of the key technical factors? And as you know, we take a pretty close look at Elliott wave whenever it's obvious in any market. And the most important pattern relationship that helps us to determine the longer-term trend, in this case with the ES, is that coming down from the May 1st high was an A, B, C. Then we've rallied sharply the last couple weeks, traded above what I labeled the wave B high, indicating that the only way we can look at this is an A and a B and a C. And what's an ABC? Well, that's a correction. Now, we could go into a lot of detail on how it could be just the beginning of a higher time frame correction. But the point is, it's at least part of a correction, if not a completed correction. ABC down, and then we've been straight up. This is part of an impulse trend, so any decline off of this should itself be a correction. And why we're looking at this today is we're ready to start that decline here in the next day or two. Daily momentums are dual look back bearish as of a couple of days ago, and that itself indicates we're at or near or have completed a daily high. We have this FOMC announcement this coming Wednesday. So if we were just looking at that and without any other pieces of technical information other than last week's high tag, the 78.6% retracement, I think it was almost to the tick. When we're in a position to potentially make a reversal, then we have to identify what the market can do to confirm that that reversal has been made. And we're in that position right now, and it's likely going to be made within the next day or two. So now we want to have a reversal signal. Well, the initial reversal signal is going to be a close above this little swing low close. And so I just hit the C key. Those were closing bars. I draw a horizontal line across that close. I want to close below 28.85 and a trade below the little swing low 28.7150. When that is made, more than likely we're going to be sideways to down and reach at least the 50% retracement. That's a fair ways below the market. So I'm totally oriented for short trades. Now, after Monday's trading, if we haven't made that signal, we'll have probably a signal that's a little bit closer to the market. If we trade just sideways to up on Monday, we'll be able to advance that reversal signal. But the whole point is we've probably completed at least a daily high, and we're going to have a corrective decline to the 50% retracement or lower, and it's going to begin here in the next couple, 3 days, and we want to take advantage of that. Now, if we were very long-term traders and we were long the market, is we'd recognize this is a corrective decline, probably just reach around the 50% retracement or so before a bull trend continues, at least sideways to up. So we wouldn't necessarily want to exit all of our longer term long positions, but for traders, this is an ideal setup for a short trade that's going to last a few days, and that's going to get triggered sometime in the next day or two. And of course, and for those of you who subscribe to our DT reports, we give you that signal as soon as it's made. So those of you who trade the stock indexes, we've probably completed at least what we call a daily high, and we're going to start a corrective, maybe continue this corrective decline early next week.